In today's business world, change is the only constant, and mastering transformation is the ultimate key to success. Welcome to Shift and Thrive. I'm your host, Natalie Nathanson. Each week, we'll bring you conversations with CEOs who delve into how they successfully drove critical change in their organization. This show is sponsored by Magnitude Consulting, bringing you the thinking power of a growth consultancy and the getting it done power of a full-service B2B marketing agency. Welcome to another special edition episode of our Investor Spotlight series on Shift and Thrive. If you're a founder or CEO navigating today's capital environment, especially for those of you in technology and selling or exploring selling into the federal government, this episode is for you. I'm so excited to introduce today's guest. He's an investor and entrepreneur who's spent more than 3 decades working at the intersection of startups, technology commercialization, and federal government innovation. He started his career in early-stage startups during the initial rise of Silicon Valley. He went on to build and scale technology commercialization efforts with the South Carolina Research Authority, and he has directed over $35 million in early-stage investments that attracted billions in follow-on capital. Today, he focuses on investing in dual-use and national security technologies, helping companies bridge the gap between what he calls the valley of death between proven technology and full scale. He's the founder and managing partner of Etowah Capital Partners. Derek Willis, welcome to the show.
Thank you for having me, Natalie.
Very good to have you. And I want to start by asking you, I know you have spent your career at the intersection of, early stage innovation, federal funding, and investing. And so I'm sure you've seen firsthand, how often a breakthrough in technology proves that it works, but then can still struggle to become a quote unquote real business. So wondering if there was a specific example or moment that shifted how you think about this kind of evolution for a company, for an organization.
Yeah, that's kind of where I've lived my life, is in the valley of death for the past 30 years. It's interesting. I enjoy the startups. I enjoy kind of navigating that in technology readiness levels, the picking them up maybe at a 3, getting them or de-risking them to maybe a 6 or 7, and then finding follow-on funding to get them 9 into a program of record. But the trick for me, where we really see transition, and we know if a product's going to make it or not, is number one is product to market fit. If you got a good product to market fit, the navigating is a lot easier. An 80% solution in a white hot market is better than an over-engineered product in a market that just doesn't fit. But typically where we can see things that break through is around readiness level 6, and that's a minimal viable product. You're kind of at the middle. What typically happens is, the perception of when you raise money is you're going in this trajectory up. Reality is you're taking a deep dive into the valley of death. You're raising money, you're diluting yourself, you're adding staff, you're building out your tech, you're getting yourself to minimal viable product, and all of a sudden one day you're like, wow, we've got it. We've got a customer that thinks they want it. We're out of money. And so you're typically at readiness level of 6. And then you got to figure out how to get out of it. So in my work on the federal side, we see a lot of the federal money, SBIR money, federal funds coming from different sources. They're addressed to threats. And what we found out several years ago in these conversations with the federal groups and the way they fund, they're after the industry guys and saying, hey guys, you just don't get it. We've got all this cool stuff on our shelves. You need to invest alongside of us. You just need to give us money and we'll get the job done. And we were like, no, time out here, guys. Y'all are, you fund threats. And when that threat's neutralized, where does the revenue come from? And they're like, that's an interesting question. Like, we look at TAM, SAM, and SOM, total addressable, service addressable, and service obtainable market. And if that doesn't line up, we're not going to put money into your grants. We're not going to follow your non-dilutive money. So we got to figure out how to build in dual use, readiness level 6. And so that's become the challenge, in the world, working with federal authorities coming in investing after phase two, phase three, SBIR, any type of research money, we're looking for dual use. And that's that inflection point that we're talking about here is where do you know if you're going to make it or not? And these days, if you can't create additional revenue streams, typically at readiness level 6, it's hard to raise money. So that's in my career. It took a while to figure that out, but that's kind of the magic inflection point is readiness level 6, and then being able to create additional revenue channels at that point.
Mm-hmm. And how much here are you talking about, right? Starting in government and then kind of the additional revenue streams in commercial versus the other direction. Can you talk through that a bit?
Yeah, my I like to tell people you got to watch your cap table from day one. That's where it's easy to get out of whack. Early stage technologies, the tendency is the desperation of the funds take the money, but we spend a lot of our time unwinding what we call big dumb checks that gum up the cap table. And so management of the cap table is very important through that readiness level 3 to 6. If you don't manage your cap table and you end up on 6 and you've given away your company, you're not going to raise any more money. So managing that cap table is most important. And if it's life science or anything that any technology where you can go get non-dilutive funding, rule of thumb is get all you can with as little dilution as possible. If you have to raise money, do it in the form of a safe or convertible note. Get to readiness level of 6. Now, if you dilute yourself at 6, then your valuation is not going to be very good. But if you take non-dilutive funds and you use good debt to readiness level of 6, once you have your product figured out, you have your market figured out, then you don't have to wrestle with investors about your valuation. That conversation becomes easy and you can defend that valuation moving forward. So rule of thumb is use use debt, use safe notes, use convertible notes, and use non-dilutive money to get you to readiness level of 6. And that makes that 6 to 9 journey a lot easier.
Mm-hmm. Yeah, yeah. I think that's really helpful. And I'm curious, thinking about the building in the dual use. Can you talk a bit about where you see those inflection points happening?
Yeah, there's a lot of ways that happens, and it's not within the strategy out of the gate, and it's a lot of fun to work with companies that come out of the gate with commercial use, and then they figure out that they've got defense related revenue channel. You got to really stick with your guns when you're coming out of the gate with your funding sources. You got to be laser focused on executing your strategy the way you've positioned it with your investors. But there's going to be a time where the investors are going to say, where do we hit the clutch, and where do we find more revenue channels? And there are companies that will help you do that, help you find additional channels. We have one here in our market. It's called Marion Square that I use a lot. Their job is to find you dual use, to find you other channels of revenue within your technologies, and they do it really well. But yeah, the board, the initial money, the risk capital, the seed stage money is going to be laser focused on the strategy of execution. But once you start executing and you find a market, then if you are raising equity, the board's going to whoever funds you is probably going to have a board position, and they're going to start pushing you. How do you find additional revenue channels? And you're going to go down dirt roads and burn up tires, and some will work, some won't work. But when they do, you know it, and you have to go with it, and you have to allocate funds, and it becomes a new strategy. But that's how you scale the company, is constantly finding and reiterations of revenue channels, new things. So in our world, gosh, in the startup world, um, when I was with SCRA, you really didn't know who you were until about 6 or 8 years in. And you would pivot almost every 2 years, and then you would find your glide path. And then that was like, all right, let's lock in. We've got something here, and let's go. But yeah, anybody tells you come out of the gate and you're executing your strategy and goes all the way to the end, There's you need to question that process.
Yeah, yeah, for sure. Well, and I can understand what you're saying, and we know Marion Square as well, and have supported their work on the federal marketing side to augment what they're doing. And I think a lot of companies entering for the first time don't realize too kind of what opportunities are available, and I think the government is trying to make it easier to bring commercial technologies into government, as long as kind of doing it the right way with proven pilots and or kind of measurable impact and things like that. So I think there's more opportunities than there were before, but knowing how
There
to do it
are.
is where you need the experts.
We had was on a panel at AFCEA in North Carolina a couple of weeks ago. One of the questions was, if you got if you had $10 million of investment, how much time and resources would you spend chasing an Army contract? And easy answer. The answer is, you spend the majority of your time, you spend 3/4 of your time and resources with that money aimed at at scaling your initial strategy. You spend 1/4 of your time chasing that Army contract. And you find somebody outside to do that. You pay somebody outside. Don't burn your resources chasing things that you don't know anything about. And you put that pressure on somebody else, and if you have to fire them, you can. But if you try to do that in-house, you're stuck with, G&A that you can't, you can't validate it. And you're like, why? It becomes a hard question in a board meeting.
Yeah, yeah, that's great advice. I want to talk a little bit more about kind of when you're investing in a company, kind of what are those things that you look for in a founder and a team. So I know you've also been on the other side of the table previously, so I think you do have a unique purview there.
Yeah, yeah, it's uh, you know, you look inside of it, you look at the people, and the you got to. I'm from the South. It's kind of the old adage, you got to get to know their mama and them. So it's a lot of corporate anthropology. You need to know who you got to really know these guys. You got to be able to play golf with them. You got to be able to get in the boat with them. Yeah, you got to know how to to talk to your investors. In the stage of where we are, investor relations are all you have. If you don't have good investor relations, you can't talk to your investors when things are good and bad. It's not going to work. And so out of the gate, investor relations 101 is paramount. Yeah, the founders, they've got to have some credentials, um, or they surround themselves with good credentials. First thing I do is, when I get a deck, if it's unsolicited, I go straight to who's around this. Where did this thing come from? Did it spin out of a company that had some success? What what caused somebody to say, "Hey, this looks like a business"? And then when I find that person, I want to go deeper. And what was that minute where you said you got to do something? Was this in response to a problem that you had in another company? Was this a bad dream you had? What's going on? And so I'll go there. But and then as we kind of fill each other out throughout the process, I like guys who've, the success. I define success as if you've not known where your next check's coming from, don't know where your funds are coming from. If you've dealt with the tax man, that means you've had some successes. If you've been shot at, or if you've been a combination of three of those, then you're ready to go in this market. But just having creds coming out of corporate, I'm not really a big fan of that, because you really haven't experienced, what it's like to make payroll. And it's hard. And these, the guys that come out of corporate thinking this thing works, and 6 or 8 years later, they've spent all of their retirement funds getting it going. Then I would say, hey, okay, now you're about ready for it. But yeah, it's a different ride. You accept a lot of risk. You lose a lot of sleep. And when you know it, it's even worse. You'll wake up in the middle of the night in a cold sweat, and you're like, I've got to deliver this product that I've been telling everybody that's so great. So I call that, what happens when the dog catches the car. What are you going to do? So those are strategies that, that I look for. I look for people who have had that moment in the middle of the night when they woke up in a cold sweat, like, oh my gosh, I, I've have I've sold this thing. Now I have to deliver it to the masses.
Yeah. So I'm hearing experience, grit, resilience, battle wounds, all of that.
Yeah, yeah, yeah.
I'm curious if any of this is changing, like what you look for now or how you look at it today versus, let's say, 5 or 10 years previous, or is this kind of, tried and true over time?
It's an evolution. In the risk capital stage, we didn't have a whole lot of data to make decisions on. So, and I'd been the route. I've burned a few things up. I've gone down some bad trails with some bad folks. But you can feel this. You can't teach it. I've had people say you need to train people to do what you do. You can't train them unless they've been there. This is not trainable unless you've been under the fire, had to make payroll, those types of things are what you have to have. But when you have, you can tell a person that has the demeanor to get through the hard times. There are going to be way more hard times than there are good times. Nobody's going to come to you and tell you what a great job you're doing until, after the fact. They're not going to see all this other stuff. So the demeanor of the person, you got to figure out, you'll figure it out pretty quickly. And I still look for that, have they done this before? Have they burned things up? Or had they been the guy that has to come in and fix things? I like those guys. So it depends on the situation. It depends on the technology, kind of where the readiness level is. Because a lot of guys come in later stage and are really good at scaling. They're the revenue guys. We love revenue guys.
Yeah. Yeah, I would say that is aligned for entrepreneurship in general, right? There's no one patting you on the back, telling you what a great job you're doing, right? So you need to either be okay doing that for yourself or
Yeah.
not needing it and pushing
You
forward
really
anyway.
don't want this thing to ring. I mean, I've known days where like I didn't even want to see that phone. So
Yep, yep. Hey, this is Natalie, your Shift and Thrive host. After chatting with lots of CEOs, one thing is crystal clear. Leveling up your company means having a killer go-to-market strategy. That's what my crew at Magnitude Consulting does every day. If you're trying to step up your marketing game, whether it's strategizing, accelerating your pipeline, expanding into new markets, or getting into AI and automation, let's talk. No pitch, no pressure, just good conversation. Visit shiftandthrivepodcast.com/Natalie to schedule a time. Can't wait to connect. So I know we were just talking about kind of what it takes to kind of fund a company at the inflection point and what you're looking for. And I want to talk a little bit more about the go-to-market side of things. And so when you are kind of moving kind of into more of that like real or predictable revenue, what are the things that matter most in the go-to-market?
I'll go back to product to market fit. You'll know when you have it, everybody will be barking. Then you have to figure out how to raise enough money to get it there fastest. And it's a burning platform. And the go to market, it's a one strike deal too. You don't get to file a couple off and then go. You have one pitch, and you got to hit it, and you got to be ready for it. And that is usually, what you're thinking about in our world. Readiness level 8, 9. You can feel it. It starts getting tense. You're questioning yourself a lot. You have to be strong in your convictions. You got to hold the team together. Everybody's got to be laser focused. No chasing shiny objects, and you got to deliver. Because your money's burning too, at a hot rate as you're delivering, and everything's riding on this go to market. So everything's got to be in sync. You got to have a really cool captain, a good CEO that knows how to lead these things. A lot of emotions that need to be controlled. But it's fun. It's a cool ride, but it's scary. You're not going to get immediate feedback from your customer. It's a new product. You're going to wonder if it works. and that's years of, all right, is it working the way? Why is nobody calling me back? Is it working great, or is it not working at all? So that go to market is it's a tense situation, and then it really doesn't back off for a long time. And if you think if and you can't get complacent, you gotta push, and then at the same time you got to be, recognize that don't push too much. So it's going to market is not for the weary.
Yeah, certainly not for the faint of heart. I'm curious if you have an example that comes to mind from a company or a leader, kind of that you were impressed by how they approach this.
Yeah, I've got one that I can talk about openly. I'm on the board of a company called Integrated Biometrics, and we and it's been a fun ride because we've actually been part of a changing an industry standard. We have a biometric reader. If you go through Clear and you hit it's the Kojak device. It's a biometric reader that comes from Integrated Biometrics out of Spartanburg, South Carolina. They have a thin film. It's a film reader, and what makes them different is the standard reader used to be an optical reader, gimbals, lights. This reads on heat and film, and so I know for a fact that it takes 12 years to change an industry standard because we've spent 6 years telling everybody that our product was better than everybody else. And all the competitors that knew we had a great product would sue us. And so we through legal and through product development, we finally got to the point where, the industry standard was set by Special Operations Command and the FBI. And they said, we think our non-optical reader is better than the standard optical reader. And it took 6 years for them to say, it is better. You don't have gimbals. You can work in harsh environments. Let's give this thing a shot. So when they changed the standard, then we had to prove, had another 6 years that we had to prove everybody that we're there. We got to go to market again. So when you have something that's truly unique, and you have some adoption, it takes a lot of time, to get through that, prove everybody wrong, and then prove everybody right. And it takes a lot of money. You got, but when you'll know it when you're at the bottom and you're out of money again, you have to go raise money. But that's when it's really fun, is you've got something there, and you can change the standard. We had another one with a company called Terracentia here in Charleston, raw distillate into liquors. The bourbon folks in Kentucky didn't like it, and they thought it was snake oil, and then they've had some issues where they needed that process. And they're like, this is really cool. So, and then we had a company out of Lake City called Carbon Conversions, and they were recycling carbon fiber off the 787 built here in Charleston. And we realized there were no standards for recycled carbon fiber after we had already invested. So we had to go set those standards. So it's fun to find technologies where you have enough runway to change these standards, and you can see these inflection points. But it does take 6 years to prove everybody wrong, and 6 years at least to prove everybody right.
Right, right. So it certainly doesn't happen overnight, but the impact can be
No.
tremendous. And before we move off of go to market, you mentioned kind of investing in a white hot market. How do you think about white hot versus hyped? How do you think about the distinction?
Height. Well, you'll have offtake agreements, you'll have orders, you'll have a lot of pent-up demand saying go, go, go in a white hot market. I don't just deliver me something right now. I've got to fix this problem. Hype is typically a manufactured market that's maybe not there yet, that the buyers, the offtake agreements aren't there, but maybe Wall Street or maybe the numbers are lining up that it might be there in the next 5 or 6 years, but it's not there yet.
Mm-hmm. Yeah, I heard that on a event recently talking about why we're not in an AI bubble. And really, when you look at the demand is truly there, right? Or it's kind of
Yeah.
outpacing what's being able to be produced. So It's a great
Yeah,
example.
the drone sector is where I'm seeing a lot of it right now. Is like, we're wanting 1,000,000 drones. Well, China makes a couple of million. We made at least 100,000 in the United States last year. Uh, Ukraine made 1,000,000. Uh, China made probably 30 million. So we're asking for 2 million, and we only made, domestically probably 100,000. That's a stretch, but it's also a white hot market. Problem is, China controls all the parts and components that go into these drones. So the trick is NDAA compliant stuff and being able to source the materials to build those drones domestically. That's a white hot market because there's demand there and there's orders.
Yeah, yeah, that's a great example. I'm curious to hear, how you personally made the transition into investing and kind of what did that shape about how you think about things
Well,
today?
uh, I didn't do it intentionally. I spent the last 17 years or 16 and a half years or so at SCRA doing early stage work. And when I left SCRA, I do some part-time work for the Navy as a subject matter expert for the new Rapid Capabilities Office. And what became apparent is there's a lack of committed capital in for later stage for growth equity around around technologies impacting national security. A lot of funds out there, but dedicated to this cause, there's not a lot. So in our market, I'm in Charleston. There's not a lot, and in fact, there's very little growth equity. Part of the problems that I had when back with SCRA is, in my portfolio, when I would get a company past an A round into a B round, we'd have to go out of market for, a B round. And the out of market funding sources would always say, hey, love what you're doing there in South Carolina. Who's your local lead on this round? Well, there's not one. Well, then we'll have to price it. So all that work that we had done starts getting diluted. And so everybody said, Derek, why don't you go start a fund? Well, I've never started a fund before. This is fund one for me. Well, go do it because there's a demand. So that's that's where I've gotten, and it's been well received. It's hard to raise money right now. Um, I've structured a $50 million fund centered around dual use technologies impacting national security. Um, the sweet spot for check size is 3 to 5 million at a later stage, uh, typically in the scale stage. So I like to call it red zone money, and with the clear line of sight to an exit within 3 to 5 years. Term of the funds 5 to 7 years, first fund, but we think we have some pathways to get it out. But be the local lead, build syndicates around that is what we're trying to do. But it was I did it, Natalie, because we didn't have it here, not because of this. So something that I thought was going to be an overnight success because it's hard to raise money in this market. There's a lot of opportunity. We have a ton of deal flow, but we're in a market here. The wealth comes from real estate, and we've got an educational gap. A lot of people, have done direct investments, taking Schedule Ks. That's good, but the later stage investments, there's no knowledge, or hasn't needed to be any knowledge of how to get into venture capital. So we're working our way through that right now.
Yeah. Well, that is spoken like a true entrepreneur, right? Just like you were talking about earlier, you saw a problem that needed solving and
Yeah,
putting in the hard work to help solve it, help
yeah,
address it. Um, I'm curious, you'd mentioned when we spoke previously of kind of being in Silicon Valley in the early days. And I know we have a lot of listeners that are in and around that ecosystem. So just curious
yeah.
if there are any kind of stories or anecdotes or perspectives you have to share there.
I had no idea what was going on. I was there from 89 to 95, and I actually worked for an East Coast company. And job was, in textiles. And all these companies around me were, these tech companies. I won't name any names, but there was one Mountain View company that used to run around with the guys, and they would tell me, "Hey, we're going to be, you need to come work with us because what you're doing right now in the distribution, sales, and all that, we're going to be putting that in a browser." in the next couple of years. And I look at them like, y'all are smoking dope. What is a browser? This would have been 1991. I said, I'll keep my job with a textile company. And I did, you know, was one of those stupid mistakes. It's a big name that sold out several years ago. Sold out a couple of times. But yeah, it's one of those things you do when you don't know. You know, I was in Woodside. I lived on Woodside Road. All the stuff, Bucks and all the guys that were up in Woodside were doing deals around me. Wife worked at Stanford, and so there's this culture out there that I had no idea that existed. You know, Park. Well, I rode by it every day, and Palo Alto Research Center, and gosh, learned how to play golf on the polo field behind Stanford, and had no clue all that was going on around me. But left there, moved back to Atlanta, had a startup in the 96, 97 time period. And we didn't know what we were doing there either. Venture capital was new. We were taking money from anybody, and the private equity groups kind of kicked us out. But yeah, hung around Atlanta, and Georgia Tech was there. Had a lot of stuff going, and kind of got into the early stage startups. And I had a stomach for the early stage risk. Started doing some defense contract work, and it was there that I kind of learned how to get around the federal acquisitions requirements, the FAR. Um, Georgia Tech Research Institute, GTRI, was doing a lot of really cool work in the defense area. I got to see some things that were going on there. There was a NASA contract called the 845 OTA that if you had a technology and a prototype, that was a contract vehicle, and you could get it downrange for the boys. And started doing that, and kind of made a little business out of it. And not a whole lot of money there, but it was dealt with some really cool people and some really cool stuff. But and knew how to go look for things of value, communication devices, you know, optics, stuff like that that the warfighter was needing. And then, you know, 9/11 hit, and it went crazy. And that's when I moved to Charleston. And then in '07, started working with a group here in Charleston, SCRA and ATI. ATI is still around there. They manage the 845 OTAs. And so within SCRA, there was a small group formed called SC Launch. So I was in one of the, you know, founding guys of SC Launch, and we had a lot of fun. We got to play. Our job was to work with the research universities, the entrepreneurs, and the federal lab to license technologies, get it downrange, uh, and help the entrepreneurs within South Carolina, you know, build out, scale these technologies with the expectations of it impacting our tax base here in South Carolina. So that was a lot of fun. So that was my trajectory. But yeah, the days in California, they paid off. I look back at it a lot and like, wow, that's where it happened. So
Yeah, yeah, very cool.
if there's anybody that watches your podcast and knows where Woodside Drive is and knows where Chuck's Donuts is, I was in the middle of that. I was right behind Chuck's Donuts.
All
And
right. I will have to check that out. I'll be in that area next week, so I'll see
yeah,
what's there.
yeah.
But it must have been rewarding to see kind of the maturation of the industry, like both tech and
Well,
investing. So
one of the things that was pretty cool, Natalie, when I was out there, there was there was a Safeway on Woodside Road, and it had a little uh, center block uh, service station out front, one gas pump. And one day, the guy that owned that, I went by there. This had been probably 91 or 92, and the guy had a Verifone terminal duct taped to uh, a gas pump. He had a phone line coming to it, and he had a power line come to it. And he said, "Use your credit card." I'm like, "I don't have a credit card." And he goes, "You got to use your credit card." And so in '91, I took my Wells Fargo card, and I thought I was buying a service station. I run it through that, and I buy gas. So I had to wait next month to see if I bought the service station. Like, what in the world is going on there? And I found out that Verifone is at the end of the road in Redwood Shores, and that was a beta site for pay at the pump in '91. And I'm like, whoa. And says, that was pretty cool. So how long did it take? 20 years to get pay at the pump, to be pervasive across all, the gas industry, the petroleum industry. But yeah, that was the beta site for Verifone at on Woodside Road.
That's pretty cool. Well, now you don't even need a credit card, right? I just bring my
It's
Apple Watch
crazy.
everywhere, and 95% of the time, that's all I need.
I tell that story to my kids and grandkids about, and they're like, "What?" And they've never seen a drive-up pump before.
Yeah. So I know, Derek, we don't have too much time left, but as we're wrapping up today's conversation, I'm curious if there's any piece of advice that you've been given that's stayed with you over the years that kind of still shapes how you think or operate.
Gosh, uh, yeah, this is, um, it's a long road, and the tech business, you think about it moving fast, but in the career paths, it moves really slow, and it's easy to jump around in today's environment. But the, the thing I would tell somebody that's starting out, find something that's number one, that's fun, that you can get into, that you understand, that nobody can dispute your knowledge of the product. And if you can carry that product out, and make a business out of it, it's very rewarding. A lot of people give up. It's in today's environment, it's hard to take things all the way through. It's hard to find people that believe in you. You got to put yourself in an environment, but the thing is, it's a marathon. It's not a sprint. Um, you're everything every person that you meet, uh, get to know them. And one of my fears, I always tell my wife this, and she goes, "Why do you talk to everybody? Everybody you see, you have to talk to them all because that person could have the answer to one of my problems that I'm working on right now. And my biggest fear is to be in line at the grocery store, and that person's that can answer my questions right there, and I have no way of getting to them. And then a year later, sitting around the table negotiating a deal, and I'm like, I recognize that guy. That's the dude at the grocery store. If I had just, engaged this guy and figured out what he did, and then just engaged him a little bit, it might not have taken this long to get there. So, use your resources is the biggest thing I would say, and don't give up early.
Yeah, I love that. I love that. Well, and I think it's just such a good example of, you never know where relationships will take you. I was just talking to somebody yesterday that was at the gym and started talking to the guy next to him, and one thing led to another, and that was his next CEO role. They had an interim CEO and were looking for their next one, and right, so you really never know where you're going to make those connections. It's not just the business events.
Yep, it's always outside of those business events. I've never had a really good, you kind of fill each other out in business events. A lot of cocktail parties in our industry. I hate them, but they're kind of a necessary evil. But you always find somebody outside of that in a family event, at a horse show, playing golf, hunting, fishing, or something like that, and you start you tend to open up a little bit more, and you find out who you find out their real character, and then if they can help, and so you get a lot of.
Yeah, for sure. And as we wrap up today's conversation, if listeners want to get in touch, what's the best way to do that?
I've got a website. It's Etowah. It's an old Cherokee name. I'm from North Georgia originally, so it's a river and comes through Rome, Georgia, and Cartersville, Georgia. But Etowah, ETOWAH capital.com. I'm there, and then D Willis at EtowahCapital.com is my email. And love to speak with anybody out there to ask questions in this world or advice. I'm still taking as much advice as I possibly can. This new journey raising this fund is rough. So anybody out there in your world that would offer advice, I'd love to hear it.
Well, that's wonderful. Well, thank you, Derek. This was a great conversation, and I loved hearing your perspective on, what it takes and the expectations for moving beyond your valley of death. What you look for in a founder and what you've seen successful, and with some of the stories about Silicon Valley's early days. So many valuable takeaways here. So thank you so much for that.
Thank you for having me, Natalie. This has been a pleasure.
Yeah, wonderful, wonderful to have you. And to our listeners, if today's conversation sparked something for you, please pass this along to another founder, executive, or operator in your network, because we know that these are the kind of conversations that help all of us scale smarter, build stronger, and create more successful and resilient organizations. So thank you again, Derek. And this has been another amazing conversation on Shift and Thrive. I'll see you all next time. That's a wrap for this week's episode. For show notes and more, visit shiftandthrivepodcast.com. A special thank you to our sponsor, Magnitude Consulting, bringing you the thinking power of a growth consultancy and the getting it done power of a full-service marketing agency to help B2B companies fuel their growth. For more information on Magnitude and to get your complimentary transformation readiness assessment, visit magnitudeconsulting.com/getready. Thank you so much for listening. We'll see you next week.